Hello everybody, hope they are good. The last 24 hours have been really volatile for Bitcoin. I mean, you can see how, they bring price down into this blue box. That's the idea that we were talking about in yesterday's video. They actually even swept the lows, okay? And then you can see how they push price back up immediately, okay? And set that reversal. And right now, if you notice, we're above the 4-hour 50 MA, so it's not looking that bad, all right? This volatility, I tell you, it's a bless because we've had very boring weeks before. I mean, check what was going on here or here or here. I mean, so to have some volatility some of these days, like for example, the ETF day or this pump or this reversal, okay, all of these days, they are a gift for day traders like us. Okay, so we have to take advantage of that volatility, and we have to also look in different time frames to try to understand what is going on in the time frames of a day trader. Okay, what's going on in the 1 hour time frame, the 4-hour time frame, and sometimes you have to go into the daily time frame. And that's what I did yesterday. I believe that most of you follow me on Twitter because that's where I started and where I have the most followers and where I'm very active. So yesterday I posted this setup right before going to bed. That was 12 hours ago, and I took two longs at 25,100 something. All right, two longs over there. I opened one and I said, that's not enough size, I have to open more. And I went with some more conviction, okay? So what I was telling you yesterday is that we had a problem, okay? That's what I was telling you, Stu. And it was that if you notice here, okay, this was when we were in this range of between 31,000 and 30,000, between 31,000 and 30,000. If you remember, we were calling for this deviation, okay? And this time, I was not calling for this deviation. I was calling for a new push into this blue box, okay? And then a push higher. But when I saw yesterday that we actually swept the lows and price didn't want to go lower, and I checked the volume, we're going to go through that in a minute, I thought, hang on, this looks exactly the same, okay? So then I pulled the volume indicator. This is an indicator that I don't use much, but for deviations or false moves, it can give you a good idea, okay? And I remember that one of the reasons why I thought that this was a deviation and I entered a short at 31,400 was the volume. Check this out, okay? This is the volume of this pump and then of this range. Usually when you see a breakout, you want to see a spike in volume, okay? But if you notice that candle here, this big green candle, look at the volume. That was the volume. It wasn't even more than this candle, for example. All right. So if you notice here, you can see that the volume was even in fact going down. Okay. You can even see that was going down. Let me add an arrow so you can see it going down. All right. And here, what happened yesterday, you had the same case. Check this out. Okay. Notice the same behavior. You have many wicks to the upside, but price cannot go through. Same as here. Wicks to the downside, but price cannot go through, okay? And then suddenly it appears a big green candle or a big red candle with the candle body attacking those lows or those highs in this case, all right? Check that out here and also here, right? But if you check the volume, it's also going down. So, sorry for the arrow. Hang on. So if you notice, how can you trust this move? How could you trust this move? Because the retail trader, what the retail trader sees is, okay, we've set a lot of wicks here. That's a support, okay? But then they see a big red candle with a candle body attacking those lows and closing where the wicks closed. And they said, okay, this is gonna go to zero. I'm gonna open shorts here, okay? This is gonna go lower. Same happened here. People here, remember please, when it was at 31,500, people were calling for 34k. I have kind of like the same vibes here. That's why I decided yesterday to enter along. Now, if you go back to the 4 hours time frame, you can see how this is developing, okay? It's true, I have to adjust this. This was something like this yesterday, but then when I saw that this was a deviation, I said, hang on, this actually makes some sense too, right? So this is somewhat what I'm looking for to happen at the moment. Again, it might not happen. We have loads of news announcements this week. Today's going to be a quiet day regarding news announcements, but tomorrow we have CPI, that's going to move the market. We also have the FTX scenario that they might get approval to liquidate some assets. Thursday we've got PPI, unemployment claims. It's going to be a crazy week. So again, this projection might not even play out, right? But so far, the first part, you can see how it's playing out, which, if you can take advantage of this, the same way as I did, that's good because it gives you at least a direction of the short term, right? Of course, you don't know if price is going to get here, and if it does, it might continue higher. Who knows? Because I don't know what the PPI or CPI is going to be like, right? But this is the basic scenario that I have in my head, and that's what I reflected in the chart, all right? So, what can we see? You've seen the stop hunt to the downside. Crypto Twitter was very bearish. Everybody calling lower prices. Then you see the volume, not enough volume. You see the idea of the deviation. And then price overnight, in my case, it spikes up and reverses. Now, this is what I was expecting to happen, but we've got a major problem here. And most of you probably notice. And it's that this pump here was at 3 a.m. UTC time. That's during the Asian session. So, can we trust this move? I mean, I didn't trust this move to the downside, but I also don't trust this move up. So, what is the trap? Was this the trap? Or was this the trap? Alright, that's the question that I'm asking myself all morning. And my conclusion is that both of these moves were traps. Okay? I took this one, I took advantage of this, took 2 longs here. I closed them today at 26,200 right before I started to make this video. So around here, okay? And I'm going to explain to you why. Again, I might be completely wrong and this might continue going higher, but this is the way I trade, okay? If I have in 12 hours a 5% profit without leverage, that's enough reason to take profits, okay? So I'm going to explain to you what I think. So far, what I can see is you had this trap and then it reverses during the Asian session. And I always tell you, and you might start to hear this more on Twitter, but I've been saying this for, I think, more than a year. Don't trust Asian pumps. And that's part also of the trading system. I mean, you can go through, different, what happened in the past and try to find Asian pumps. And I'll tell you, they usually don't end up well. They tend to get retraced. Okay? Most of them, I will probably tell you, plus 85% of them, they get retraced within the next New York session or the next Asian session. And this is something that I also talk in the course, okay? But that's the thing about the Asian sessions. You have to be very careful with them. Now, this pump here, in principle, it's very likely that gets retraced either today or in the next Asian session. But there is also a chance that it might be one of those, 10-15%, and maybe this continues, to continue going higher if CPI tomorrow is good, and at the end the FTX don't get the approval to liquidate assets, or if it's in this case, sell the rumors, buy the news, the opposite, okay? But if that's the case, then yes, we're gonna go and hit these 2 liquidity pools in the very short term. But what I see at the moment is that, the chances are that if Asia pumped, this is not a place where I want to enter new longs. So if you enter here, do whatever you want. This is not financial advice, but I would be very careful. And if you can secure some profits, it's never a bad option, okay? You got here, again, a 5% move. What else you want, okay? Okay, so what I think is that usually Asia pumps, then London holds, and if that's the case, then New York will dump, okay? So if you mark the sessions, you'll be able to see that Asia pumped here, okay? That's your Asia pump. Then London should be holding in this zone, but hey, they are not holding so far. So far they've pumped too, okay? Hang on, let me change the color so it's not confusing. The colors always have to be this way, otherwise it doesn't work, okay? It's the same as the wicks and the liquidity pools. Asia is purple, London is orange, and New York is white. Otherwise, it doesn't work, guys. So, if you want to see something like this, then you need to see London retracing in the next 2 hours back to when you open the session, okay? So you at the end, you might think that this is a pump if they close here, but no, because they are closing at the same price as they are opening the price, okay? So if London decides to retrace back into this level, then at the end you're gonna have Asia pumping, London holding. You just ignore this noise, and then that's when the New York can retrace the whole Asian move, okay? So that's the first scenario. If London decides to retrace this pump here and comes back into this zone by 2 p.m. UTC time, then there is a high chance, a high probability that New York dumps. All right? That's the first thing. Now, what could happen if London doesn't do that, okay? Then if London doesn't do that, we're going to watch the Asian session tonight, because then they have a high chance also that they decide to dump. So, we're basically not going to favor higher prices as long as this Asian pump is not retraced. That's how strict this trading system that I developed is, okay? It doesn't let me go long as long as this pump in this session gets retraced, because it's something that I don't trust, okay? Again, it might not get retraced in the New York session, it might not get retraced in the Asian session, then that would be part of that 10-15% of Asian pumps that don't get retraced immediately, but they all get retraced at some point, okay? And that could be then CPI, FTX approval to sell, PPI, unemployment claims, could be anything, all right? So we want to go very careful this week. So far, I tell you, with this trade here, I've done my week. But of course, I want to enter into new trades. Now, the thing is that I don't have that much pressure now to enter new trades, okay? So, and also considering that tomorrow and on Thursday, we have loads of news announcements. And that means that, first of all, you can get stopped, okay? Because maybe you see a candle, like, let me show you an example. Maybe you can see a candle like this one, okay? Check out this candle. Wick to the downside, you can get stopped there, and then another wick there. So, these candlesticks are going to happen this week. You're going to see candles like this week, okay? Or candles like, I don't know, let's try to find some more of those crazy candles. Or, for example, a candle like this one, all right? Or these ones. You're going to see these candles in news announcements days. They're very common, okay? Or this kind of candle. This candle is basically screwing everybody, okay? Longs and shorts, all right? So, you have to be very careful, especially on Wednesday and Thursday. And that's why I'm going to be very selective with my trades the rest of the week. Now, if today we get what I'm telling you, if we see London dumping here by 2 p.m. UTC time, then you have the Asian pump, London holds, and New York dumps theory, okay? Alright, so I hope that was clear. I hope that was clear in the chart. Now, I would like to check what the dollar is doing, because, the dollar is not, well, Bitcoin is not following the dollar. It's been something quite bizarre, okay? You can see we have this gap. We're talking about this gap that needs to get filled, all right? But you can see that this was on Monday, right at the start on Monday, all right? The dollar dumped, okay? And that's when Bitcoin should have gone up, but Bitcoin also dumped. And then yesterday, in midday, and also overnight, so that's basically now when Bitcoin has pumped, the dollar has pumped too. So why is Bitcoin following the dollar? It's doing the opposite, okay? So when that happens, then I tell you, this chart this week, we don't look at it, because it's not being correlated with Bitcoin, so it's not going to give us any idea, okay? Or it can be quite misleading. So usually Bitcoin follows the dollar, and it's something that it's a fact. You can go in any time frame, then you're gonna see that. You can even go into the weekly time frame and see when the bull market and the bear market starts and finishes. That's basically the cycle of the dollar too, all right? But at least this week, Bitcoin is not following the dollar, so we're not gonna be looking at the dollar this week. At least me, we're gonna be focused on Bitcoin, okay? And so far, my attention is in this Asian pump. I don't trust it. All right, now let's go and check high block capital, how it's looking, guys. One high block capital liquidation levels, and always the first thing that I check is the delta. Right, so right now it's pretty much at zero, but you can see how yesterday there was $8 billion worth of short liquidations, okay, which explains the short squeeze. All right, now if you check at the right, these spikes, we were talking yesterday that the spikes were to the downside all the way to 25,300. They took that zone, so you can see how Bitcoin follows the liquidity. And the next question is, what is the liquidity right now? All right, so what I see in the chart by looking at the spikes at the right, those are the liquidations of high leverage traders. The first thing that I see is that to the upside, we have here some liquidations at exactly 26,400. Okay, that's not, well, actually there is a lot of liquidations up there, right? There's quite a lot of liquidations over there, so that's going to be a zone of interest, 26.4. Okay, but please check to the downside. Look at this, okay? 25,994, 204 millions worth of long liquidations. We check again here, another 204 millions at 25,700, and another 204 millions at 25,200. All right, so this is a lot of liquidity. You can see how the liquidity is to the downside, because when the retail trader sees prices going up, what the retail trader is going to do is going to be chasing that price. Okay, that's also what happened yesterday. Price was dumping here, and how many calls on Twitter you saw of a deviation? How many traders, how many people were calling for a deviation at the lows? Nobody was. Everybody was calling at lower prices, and that's because the retail trader is programmed to think that when price is going down, they have to chase those red candles. They have to go short, and when price is going up, they have to open longs. And that explains all the short liquidations to the downside here, that they got squeezed in this sensation. And that also explains how those traders or new traders decided to open longs in this green candle. Right, so that's where the liquidity is right now at the moment, in those big green candles. All right, that's why they're also called liquidity pools. So now, right now, we go to the liquidation heat map. Let's check what we got here. All right, so you can see here, all right, a lot of liquidity right below the two previous lows. That's normal. There is always liquidity above the previous highs and below the previous lows. Doesn't surprise me, but in yesterday's video, we were also talking about this zone of liquidity, okay? Around 26,700 and 26,800. So why not? Is it possible that Bitcoin, or imagine if London doesn't retrace its pump today, okay? Then you know that New York is probably not going to retrace today. So that brings you to the idea, what about if this pump is not finished, they come and attack this zone before tomorrow's CPI, or with a week to in tomorrow's CPI, and then that's when you can see price reversing. All right, that's another scenario to keep an eye on. Okay, 1 month time frame. Look at this, guys. All right, a lot of liquidity at 25,200 and 100. They took it. The liquidity to downside is increasing at 23,500 still, and there is still quite a lot of liquidity above this previous high. Okay, do I think we're gonna get this high? I mean, so far I cannot look at these targets because they are quite far away, all right? And to be honest, you know, if you want to see this price getting hit, you need this week really good news announcement. So it's something that I don't know. But to the downside, 3 months time frame, you can see that the liquidity in this zone keeps increasing and increasing and increasing. And I tell you something, with what happened yesterday with this drop, okay? And then you have this pump. During this pump, because it's quite an aggressive pump in the Asian session, I'm sure we've checked also the liquidation levels. New traders open longs because they were chasing that green candle, which causes the liquidations here to increase. So you can see that, okay, the market maker is chilling. Okay, he's chilling in his office and he's saying, okay, you know, with all these spikes down and reversals, the retail trader is going to continue adding some more liquidity for me here. So when there is, some bad news that can justify a drop in price, they are not going to hesitate but to drop price to this zone. That's why it's very dangerous, okay, to be into swing trades at the moment. That's what I always tell you. In weeks of news announcements, go flat into news announcements. So tomorrow and Thursday, go flat into the news announcements, go flat into CPI, go flat into PPI and unemployment claims, okay? And then if you want to take some scalp, some day trades, go ahead, but keeping your risk very adjust and managed, okay? So if there is suddenly bad news and you're, for example, in long, it doesn't catch you by surprise and dumps towards this zone, because that can happen in literally a 1 hour candle, okay? So that's pretty much everything that I want to say in this video. Now, before I finish the video, I want to remind you that I'm currently doing this campaign with BingX, one of the top exchanges that doesn't require KYC, one of the only ones. And we have a campaign going on for this week. You can see all the rules and conditions here, but you can see event end time, that's on Friday night, okay? And basically, the campaign is that if you register and you deposit $50, you're gonna get $50 for free. You get the 20 bonus for registering through the link and the 30 bonus for depositing those $50 and keeping them there for 3 days, right? And then you can also do this condition to get $100 rewards. That is $5,000 on trading volume. That might sound like a lot, but I told you yesterday too, it's basically 5 trades with $100 in times 10 leverage, okay? So it's pretty easy to achieve. And also you'll have a 10% discount on trading fees, okay? So if you want to support the content and you also want to take advantage of these tasty rewards, okay? You guys know I don't have any paid groups. I sell all my analysis for free. I don't shield any coins, but it's true that I work with exchanges because I also get benefits on trading fees discounts, and I can also give you some advantages like this, okay? So if you want to support my content, please feel free to use the referral link here, okay? Make an account, deposit $50, you get $50 for free, and you'll also make me happy. So thank you so much guys for watching, and I'll see you soon.